Hi dear traders and investors, today is Tuesday, November the 1st. I'm ready to share a red hot market review prepared for InstaForex. What's going on across global financial markets? Crude oil reveals that the downward bias has been disrupted. I warned about it yesterday and the day before yesterday. In fact, there have already been 3 attempts to break the downtrend. So we could have had 3 trading opportunities. If you haven't entered the market yet, the time is still alright to plan long positions. Curiously, JP Morgan offers 6 scenarios for the Fed's rate hike tomorrow. In fact, there are 3 basis scenarios. For example, the rate hike of 75 basis points will be followed by either hawkish or dovish scenario. The rate hike of 50 basis points could be also followed either by a hawkish or dovish scenario. Besides, the rate hike of 25 basis points could be followed by such alternative scenarios. What else? Yesterday, I bought the EUR at a breakout. Now, let's discuss my trading ideas on charts. Gold has been developing a confident rally. I expected the rally yesterday. Asian traders began pushing the price up. Look at a 1-hour time frame. On September 24, Asian traders also reversed the trajectory. On September 19th, Asian traders also crashed the gold price. Recently, in October, Asian traders also went short on gold. Today, the metal has been growing for the whole day. The price has already jumped by 2,000 points. Asian traders are trading against Americans. It sometimes disrupts our trading plans, which are developed with American trends in focus. It means that Asian traders insist on their plans. I didn't open long positions here. I tried to go long yesterday, but something went wrong. So some of my stop losses have been triggered. I expect the price to break this high. I remind you that the crucial event of the week is the Fed's policy meeting tomorrow. The policy decision will be followed by Powell's press conference. Traders are speculating whether Powell will be hawkish or dovish. Hence, be aware of erratic moves in the gold price today and tomorrow until the Fed's meeting. If you haven't opened long positions, you'd better wait until the Fed's decision. I used to tell you nice targets for both long and short positions. It's a question of time when these targets will be hit. Meanwhile, I have an interim target for long positions. I could be broken immediately or after a retracement. Then our downward target will be hit. It could be the opposite scenario. First, the downward target will be hit and then the price will shoot up. There are nice targets. You plan positions on the basis of your indicators of impulses. The euro is gaining ground. There are a couple of bars on the daily chart. Today, the euro is making downward moves. It's facing strong resistance, so it might reverse its trajectory. I can suggest a trading plan for short positions. I spotted some interesting moves on the 1-minute chart. Now I see the euro-dollar pair under buying pressure. Anyway, all scenarios for activating stop losses will be implemented tomorrow. The same story is about the pound-dollar pair. I suggest the sterling will try to challenge its buyers and its zone. It could fall from the current levels or even from higher levels. I see some reversal patterns. I evaluate the downward move of about 1,200 pips from the current levels. The dollar-yen pair is drifting lower because the US dollar is losing its footing not only against gold but against the yen. The pair went down in the Asian session. The buyer's stop losses were activated. Perhaps we will see an upward move later. Nevertheless, I reckon the US dollar will rebound, so the dollar-yen pair will go up in the New York trade. Dear friends, save your deposits for tomorrow as the Fed's policy decision will set the market in motion. That's all for today. See you online later.